I noticed that ANZ Bank has come to the rescue of the Forge Mining Services Group in Western Australia with quite an interesting strategy involving some very low-cost options, which sounds like quite an adventurous move for a bank, capturing the upside. We've also got this situation where Qantas is asking the government to come to the rescue. Do you think that there's a lesson there?
Yeah, there is, but I don't think Qantas were as desperate as Forge. But the structuring of deals is important, and the debate about the government supporting Qantas needs to be put in context. So we've got we've got the Forge deal. We've got also history in United Kingdom. We've got history in America in the GFC, where the Treasury did TARP and bailed out the American banking system with $120 billion of preference shares. Well, the question has to be asked: does the Australian government consider putting a preference share or a convertible note into Qantas? You don't underwrite it, but what you do is say, look, we're prepared to put some taxpayer money in there on appropriate terms. Now the stock price is $1.20. You can issue us 15% of the company in convertible redeemable notes. We'll come in at $1.50, give us a 10% yield. And that'd be a great deal for everyone. Qantas is funded. Australian government's back on board. Taxpayers getting a return for his investment. And it would actually show up some of the institutions, I think, in Australia who probably should be thinking about the same sort of thing. You don't recapitalise companies which don't pay dividends. It's pointless, who are not growing profits or even getting a profit. But if the government has to get involved, that's how it should get involved.
Well, I think you're very aware that airlines are organisations that so many of them have got government involvement anyway. The Virgin, the competitor, isn't subject to the same limitations of ownership or indeed limitations on financing that Qantas has got. So Qantas has got to do something pretty clever. But you're saying that governments shouldn't be in the business of basically buying back equity in airlines.
Well, they shouldn't be, but let's put it. But the government is the backstop. As the Reserve Bank's the backstop of the financial system, the government's the backstop of the economy. So if your major airline says we need help and comes back to the government, then the government should listen to it and then should structure a deal for the benefit of taxpayers. Now, we all benefit by having a competitive market in airlines and having two strong competitors giving us good service and safe competitors, So there's no reason why the government couldn't go back and take a stake, but they should do it on preferred terms. And then Qantas can work its way through, and then if they want to buy the notes back, buy the notes back, but meanwhile the taxpayer's got a good deal.
But it's a very different circumstance from sort of should Joe Blow buy Qantas stock. So they shouldn't necessarily have to operate, the government shouldn't have to operate in that same way.
Shouldn't have to, but it's a unique situation, But the use of convertible notes and bridging debt and converting debt, which we're now seeing ANZ do in Forge, is very underutilised in Australia. And you've heard me before, I have a complaint about the Australian capital market. I don't think it operates efficiently. It's being infested with investment banks who just wanted to do a deal.
They just need deals.
Just do deals. But they don't actually think about what's for the benefit of the company and what's for the benefit of the investor. And you constantly see equity going into companies with no conditions, no dividend, limited votes, and this going for a ride to find out whether this works. It's pure speculation. Now, just on speculation, I just want to cover this because we wanted to talk about Forge. There's an example yesterday where we had a highly speculative market in Forge shares, which need not have been so.
It was very underinformed, wasn't it? Because how long was it between the time that the explanation came out and the trading
20 minutes. 20 minutes, and it's interesting. It was 10 to 10, and then it came on at 10 past 10, whatever. But the point was that 13 pages of document after a company's being suspended for 3 weeks with rumours of it being insolvent and calling in administrators and then coming back and look, by the way, we're on the market in 20 minutes, we're trading, was a disgrace. Now, the ASX has to understand who loses out of this. There's obviously people who are geared into that stock with margin loans. They're taken out in the opening. There are foreign investors who must wake up the day after and say, what has happened here? We're a shareholder in this stock. You mean it's been trading for 24 hours and we haven't got the information?
They were asleep at the time.
They were asleep. Even people in Perth, it's a Perth company, at 7 o'clock in the morning they're getting out of bed and their shares are trading. There was no reason why this stock couldn't have been held for another 24 hours and information flow.
3 weeks in one day.
So my point is ANZ, good deal, good structure. Australian government, think about it, you may well do a similar sort of structure.
And everyone's got to be informed for more than 10 minutes.
Great.
All being well. Thank you very much, John.
Thanks.